So I think the primary takeaway from the election is that we're going to have continued gridlock in Washington. We shouldn't expect any major initiatives on taxation or infrastructure leading the way in 2019 and of course in the approach to the 2020 presidential election. One thing that is going to have to be addressed is the status of the NAFTA Modernization Treaty. Now, my sense is the Democrats are going to insist upon a more clear definition of enforcement around labor and the environment, and perhaps taking another look at the investor dispute mechanisms for the companies that operate on a global basis. And because of the way in which NAFTA has been modernized, we expect middle market firms are going to be doing that in a very aggressive way over the next several years. NAFTA modernization was really sort of a mixed bag. There were some really good parts, in particular Chapter 25, which is the small and medium enterprise portion of the modernization, which really for the first time will create a level playing field for small and medium enterprises in order to bid on the projects that are going to be going on out there. I'm very encouraged and excited about what the future is going to look like for middle market firms and global commerce. Now, the more difficult parts of this are going to be organized around what's called Chapter 5, and those are the auto content rules and the wage floor that was been put in that will primarily impact manufacturing. Now, for American and Canadian middle market firms, at least in the short term, this is probably going to be a good thing. It means more business. Now, if you're a middle market firm in Mexico, you're going to bear the burden of the adjustment to the new content rules and that $16 wage floor as it evolves over the next 5 years. My sense is over the medium to long term though, what you're going to see is just more efficient production, more automation, and not really anything that's significant in terms of orders of magnitude of shifts of production or assembly lines back to the United States. But to come back to the beginning of this, that Chapter 25, the small and medium enterprise chapter, that means there's going to be more opportunities and more business for the middle market firms in Mexico, the United States, and Canada. It looks like there is a probability that sometime in early 2019 we will see an increase in tariffs from 10% on the first tranche of $267 billion worth of Chinese goods, moving to 25%. If there is not a resolution early in 2019, we do run the risk by the middle of the year, you're going to see 25% tariffs on all $517 billion worth of imports out of China. At that point, we will have moved from a trade spat to a full trade war. While we will see some movement early in the 116th Congress to make very fine adjustments to that tax cut, one should not expect the tax cuts that are temporary to be made permanent in the 116th Congress. That's just a simple function of the partisan gridlock now that Congress is divided between the GOP and the Democratic Party.